we're going to be in a bull run until spring of next year. Then in spring of next year, you will have this, something will happen price-wise. I would expect Bitcoin to hit between 120,000 to 150,000.
Welcome back to Defire, your crypto storytelling podcast. My name is Jonas, and today we are joined by Anton Golub. Anton left his lucrative career as a high-frequency trader to build Lykke, one of the very first crypto exchanges and one of the first crypto companies in Switzerland, period. He then moved on to start a market-making company to solve one of the crypto exchange's biggest bottlenecks: liquidity. It is safe to say that Anton understands the dynamics and flows of the crypto market better than most, and we dive into all of that in our conversation. Anton also shares his story. We talk, of course, about Lykke, market making, and why he is currently putting so much energy into building a following on social media. And last but not least, of course, I had to ask Anton about some price predictions and how he sees this bull market play out. This is an episode packed with valuable insights that you don't want to miss. So let's get started. Anton, thank you so much for coming on the show. Actually, I don't know if you remember, but I met you once at Impact Hub in Zurich. Since then, I follow you. Do you recall any of it? Or I wouldn't be surprised if not, to be honest.
To tell you, Impact Hub, that was a long time ago, right? So
yes,
there was something like 2015 or 16, while I was still hovering around Impact Hub, the one in Langstrasse, if I recall it correctly. If it was there where we met. And I have fond memories of that. But to be honest, I think like Zurich transformed in a sense, like where the action is. I don't know if it's still at Impact Hub, and for the crypto community, I definitely feel Trust Square is the place to go. But I'm biased because I'm one of the founders of Trust Square. So take it with a grain of salt. Take it with a grain of salt. Yeah.
And no, I actually would be surprised that you remember, because actually it was at it was something with a growth hacking event. And you were there with a friend of yours who had an app, Sebastian Fiori or something, I think his name. You're
Sebastian
like best buddies. Yeah, you're like
exactly.
Good friends, right?
Yes, exactly. So it was Sebastian Gupser who did an app. It was meant to be Instagram, but for food. Yeah. This was the goal. I think he went off in a different direction. Just to tell you now, he's now a rapper in Miami, doing rap videos and reggaeton videos and working for Google on the side. So
yeah. On the side, yeah. Italian rapper also. That's the crazy part. Exactly. He's in America, but he's rapping in Italian. I follow this guy. It's interesting. Yes. And I think at the time you were still at Lykke,
exactly,
which is one of the first, I don't know, it's an exchange, right? It was a crypto exchange. Take us a little bit back to the time when you maybe started with crypto, how you got into it, and what Lykke was.
Yeah. To give a bit of like one step behind, actually, before my crypto experience, I worked at a fairly big hedge fund in Switzerland as a trader, as a high frequency trader, coding the algorithms and then trading with these algorithms all in an automated computerized way in the foreign exchange markets. And it was, imagine I was like 25. It's a dream come true for every young man to work at a hedge fund as a trader. And I ticked that box very early on and really had a blast. But I had a visionary boss back then at the hedge fund, Richard Olson, who was always talking about the next frontier, the next steps. And I remember when I joined early on, he kept on saying, there is this thing called the blockchain, and it's like a settlement layer. And on top of it, you have the first asset, which is actually Bitcoin, but it's native to the blockchain. And he was telling me all the time about it. And look, the way I like to describe it, I was lucky to be at the right place at the right time. Richard decided to forego the hedge fund. He said, this is the past. This is not the future. The future is blockchain and cryptocurrencies. And was just very lucky and fortunate, also because of our very good relationship that Richard and I have, that I co-founded together with Richard, the second ever crypto company in Switzerland. The first ever was actually Monetas. People don't remember it because it blew up in the meantime. The second, but the first alive company was Bitcoin Swiss. And the second after that was actually Lykke. And
so the third.
So the third, but the second alive. Okay. Startups, it's, it comes and goes. So this is a different story, Yeah. And look, we launched back in 2013. There was nothing in Switzerland, but also globally. Very few companies. You had Kraken and Coinbase, but they were so small, microscopic. We had one big company. It was called Mt. Gox, for those who remember, where you could trade, cryptos. Mt. Gox had 90% of the volume back then. So 90, not 19, but 90% of the volume.
Yeah.
We launched Lykke, sometimes like summer 2013. Everything looks so promising, so awesome. Some months later, turns out Mt. Gox was the biggest scam ever, basically stealing funds in the back, reminding us of FTX. The whole thing exploded. Very difficult times. This is what I learned very early on as a startup founder. Like 2014 was a disaster. Like you would go and pitch Lykke or pitch a startup. And the first two questions was, what is Mt. Gox? What happened there? You have to explain it's a scam. It was a scam. The second question, what is Silk Road? Silk Road was marketplace for illicit activities where Bitcoin was used as a payment. So very difficult 2014. But then it was a typical startup story for Lykke. You get the right team together, you get funding, and it took off. So from early days, Richard and myself, 2 people. At the peak, while I was still at Lykke in 2018, 216 people.
Wow.
People usually use Lykke as the exchange, but you had many different things. Lykke was doing corporate solutions, so B2B business, crowdfunding advisory, payment infrastructure, like this OTC asset management part, and a crypto exchange. So this is where you put 200 people. Really amazing experience. Was lucky to be a part of the crypto community very early on. Just had a blast. Amazing time.
Hey, just to dig a little bit deeper, because you mentioned the high frequency trading and the hedge fund. Was that the founder, your co-founder, Richard Olson, was he also the owner of the hedge fund?
Yes, exactly. So Richard was even back then famous because he founded Oanda, which is back in the day was the biggest market making platform on the planet for foreign exchange markets. So you could go and you could trade. It doesn't matter if you're a professional or retail investor, you could trade foreign exchange markets at super low spreads. So they were the same as you for a big bank, and ticket sizes from $1 to $10 million. So free, available from all. It doesn't matter how big or small you are. And Oanda was a massive success story. Really amazing. And then he also had a hedge fund. And I was working at the hedge fund. And Richard was just a visionary, really kind person, super smart, super intelligent, but always visionary, maybe a bit too much, but too much seeing in the future. And to explain what I mean by that, many times, like when I worked very closely with Richard and Lykke, he would say something in 2013, 2014, he would say, Anton, this is a good idea. And then only 5 years later, people do it exactly how he said it. With Richard, you have to listen very closely what he says, because in some years it will be exactly how he says it.
Yeah, and it's also like you can be right, but you also have to be right on the right time, right?
Exactly.
If you're too early, it's hard to. It's almost the same as being wrong.
Yeah, you are wrong. You're wrong. You are wrong. Actually, you're too early. Yes.
Okay, but what do you think? Because Richard, I've Googled him. I've actually also seen him once. He's already a little bit now an older man. What do you think he saw in you that he said, "Hey, Anton is my co-founder of the next big thing that I want to dedicate so much time on"? Like, how did you get this magic going on between you and your boss? Like, that's not something everybody has. What do you think he saw in you? What do you think?
Yeah. Look, I'll be very pragmatic with my answer. I think I was young enough, I think also like I was very open to saying, let's do it. And this is how I reacted when he said, let's do a startup. I had zero idea what a startup is. And a hedge fund job is a very good job, just to explain it to people who don't know hedge funds. It's a very lucrative job. 25 years old, like you don't have any money problems for the rest of your life. Let's say it like that. It's very comfortable. It's a challenging job and so on, but it's like the best thing money-wise you can have, actually. But I was young. I was open to it. I really wanted to be a part of it. And I will also like to add that I was maybe smart enough at that, not experienced enough, but smart enough at that point that I could do the things that were required from me. And I think it was a good match because I was a mathematician, coder, quantitative analyst. And Richard, obviously at that time, didn't have an interest in coding, playing around with algorithms, with math. So I think it was like a good fit, actually. And also it's just many times openness, because you don't know how it will go. And the reason why I say you don't know how it will go is because I'll tell you a public secret about Lykke. Lykke had 3 founding teams.
Okay.
So when we started, there was a founding team created with some very well-known people today in Switzerland in crypto. And then that founding team was Richard, myself, and a few more people. And then that founding team didn't play out because it was not the right fit. So it fell apart.
Okay.
And I remember when that happened, I came to Richard and I said, oh my God, does this mean it's over? What do we do now? Is the startup gone? Or what do I pack my bags and go? He says, no, Anton, this is normal. Don't worry. Let's keep on going. There was a second team assembled, which again, for many different reasons, was not the right fit. It fell apart. And then I used to go to Richard and say, Richard, don't worry. These things happen in startups. You need to find the right fit. And then only the third team that got together, it was end of 2014, was the right fit. The funding came in, and then the company started growing. And this is what I meant to say, is that it's like I was the right fit with Richard, because sometimes you need to put the right people together. And until you don't have the right people together, the startup cannot move, actually.
When you say high frequency trading, I really want to go afterwards with Lykke, but I still have some questions about high frequency trading. I read the book Flash Boys about it by this, now I forgot the name, very famous American author. Yes, Michael Lewis, exactly. Yes. Can you break down for people who are not so familiar with high frequency trading, which I think most people are not? What is high frequency trading, basically? Explain to a 5-year-old, and what is the edge that you had at the time?
Yeah, high frequency trading actually, in simple way, can be described the way the terminology is structured. So high frequency in this context means actually extremely fast. And when people reflect that, they would first, you need to explain what does extremely fast mean. But it's like people usually, if you invest, or if I have invested, I'm not a trader, actually, I don't trade every day. But usually trading or investing is I press the buy button, and then I wait for a long time, and then I press the sell button, hopefully in a profit. This is how people perceive investing or even trading. And now you can go and say, maybe my long time is a year. For you, it's 10 years. For some, it's 1 week. For some, it's a few days. But high frequency trading really takes that to the extreme, in a sense that the time period when you trade, so that means in and out, can be measured within milliseconds. So for me to blink, I just blink. This is 250 milliseconds, by the way. And imagine you trade in a 1 millisecond. So that's how fast. What does high frequency trading mean? It's extremely fast trading, where the time horizon when you're in and out is extremely fast, faster than you blink. Now, I made it now very simple, but also then you have two different categories in high frequency trading. The reason why I mentioned this is because you referred to a book. Yeah. You can have aggressive predatory high frequency trading, or you can have passive, well-intentioned high frequency trading where you add value to the market. And the aggressive predatory high frequency trading is the one that you referred to in a book, where you trick people because you're faster. Mm-hmm. And that one that adds value is when you provide liquidity, is when you do market making. So this is, I think, like to explain, high frequency trading is extremely fast trading, where you can either be a bit like a predator, so you're like in a jungle, so you're like catching the slower animals, or you can be like a bit of somebody that adds value, but you still trade extremely fast.
So the predatory, which you refer to as like this front-running thing, you see something is happening, this guy is going to buy a huge load of this and this product. In your case, it was foreign exchange. So basically always currency trades. Then you would go ahead, buy it before, check up the price, something like that, and then sell it again once he's coming to buy. Basically, you turn around and you sell it back to him, and you know that he's going to buy it now tiny bit higher, and you made a little profit. It's very layman's term, but I always imagine it's like that.
Yes, it's basically squeezing yourself in front of the line and then selling to people at a bit higher price than they would otherwise get. I think like now, when you described it perfectly, but now people say, but how can that happen actually? Like, why would you allow anybody to get in front of you? And this is what usually people don't know about high frequency trading, that high frequency trading, the predatory one, takes advantage of the fact that you have many different exchanges and you have rules how these exchanges have operate, and then smarter people game the rules. And that's why they're able to jack up the price a little bit, because it's very specific how these exchanges operate and how you have to do the trading when you have a lot of exchanges. Yeah.
And you have to be physically, that I also thought interesting. You have to be physically closer. And it was like millions, hundreds of millions worth to be a little bit closer to the data center, because only then you can squeeze in the line. Is there something that your days in high frequency trading that resembles that in any way, or how is it there? Is it there more, okay, the good kind and providing market liquidity? Or what do you think?
Yeah.
Now looking back with a little bit, maybe a critical eye, do you think you have been more the good type or more the predatory type back then?
Yeah. I would like to think I was more the good type, the one that adds value, the one that provides liquidity so that other people can trade. Doesn't matter if you're the good or the bad guy. In high frequency trading, you have to be as closely connected to the exchange. So literally we have to have the same length of cables, because I have a longer cable, you have a shorter cable that plugs into the exchange, you have an advantage, right? So we all have to have the same cable size. So it literally means like, this is the server of the exchange. Your server has to be next to them, like in the same room, or literally the same room. But I think like usually people now ask, but why does this happen? Why does an exchange allow this to happen? Why don't everybody has the same server and the same cable size? And this is actually something that I don't like about traditional finance, is because exchanges do that on purpose. On purpose, actually, they show up and they say, who wants to pay more? We'll get a server closer to our server. We'll get a shorter cable. So this is a problem, how exchanges and traditional finance operate, because they enable predatory behavior. The predatory behavior doesn't come out of nowhere. You have to have the right environment. And this is something that I prefer more about crypto, especially about DeFi, where everybody's on the same term. Everybody. That's just how it is. And this is what I don't like about traditional finance, where if you're the big guy, if you put money on the table, you get to be in the right room, right? With the right cable length. And if you're not the big guy, if you're just like you and me, you get screwed over.
Okay. Now we're jumping maybe a bit ahead, but I think it matches the topic, because you, with your experience, would have been perfectly set up. And I'm challenging a little bit if today it's now better in DeFi, because we all know about MEV, that you can basically get an advantage. You read the blockchain, there's a pool of transactions coming in, and you can read what kind of transactions are in this pool and going into the block, and you can start to mine the block before, or squeeze in another transaction before to extract value from. Basically, it's the same thing. Or would you not agree that nowadays it's even maybe more prevalent on Ethereum, MEV, and other blockchains as well?
Yeah. So MEV means miner extractable value. In a sense, how can I, because the way the blockchain works is like you have a block of transactions and you put a lot of transactions, right? And the question is, where are you in that queue, right? In the block, once it gets added to the blockchain. And this is exactly very similar to the predatory type of trading in traditional finance markets. But again, this appears because how things are created, right? Because you have the miners who are mercenaries, who don't care that you get the best price. They're just there. If you say, if you pay them a higher mining fee, they will put you in front. That's it, actually. That's it. And I think that, first of all, these kind of problems only appear in certain type of blockchains, by the way, actually. So in many other type of blockchains, you don't have a problem with that. And I think the reason why it's so prevalent is because Ethereum is actually the most popular smart contract, DeFi blockchain, let's say it like that. And there, these kind of problems appear. But I think it's now a very interesting dynamic, because you have these people who front run the trades, but now you have service providers who let you game the ones who want to get in front of the queue, and then you actually get in the right place in the queue. So again, this is the part that I like about DeFi, that I like about blockchain, is because if something is adversary towards you, you have then service providers who try to remove this adversary, which is again not what happens in traditional finance. In traditional finance, you have the regulated exchange. They say, we want to make money, and we're going to make money by preferring certain people over others. And that's just how it goes. And I agree with you that these are flashbots basically game the system a little bit, but you can game them, and then everybody's on the same terms actually afterwards.
Yeah. Okay. Fair enough. Okay. I think what we've done here is like we covered a little bit now of your story, and I'll let you now fill in the next things, because you've done more than that. After Lykke, you've done, I think, 2 more enterprises that I'm aware of, maybe more. Maybe can you continue the introduction of yourself in terms of what you've done so far in crypto?
Yeah. So then I remember the day, it was January 3rd, 2018. I said, Richard, let's have a meeting. And we met, and I said, Richard, I would like to go on my own, try on my own thing. as a leader, as a CEO, and found my own company. And he took it very positively, very welcoming. And he said, off you go, do it. You have my full support. And I decided to launch a market making company. And usually then people ask me, why did you launch a market making company after we ran a crypto exchange? And the reason is there is something beautiful that happens the first day when you launch a crypto exchange and you put all these tokens there. You discover the hard way that if you don't have liquidity on your crypto exchange, if you don't have liquidity for the tokens, it just doesn't work. It falls apart. Nobody can trade. The spreads are like this. The costs are super high. Round trip, if you want to get in and out of the trade, it costs you like several percentage. It just doesn't work. And I remember the first day when we launched Lykke exchange, I take a look and I'm like, why is nobody trading? What is this? Completely empty. There's nobody there. And then obviously I was a high frequency trader. I was like, yes, there's no liquidity. We need market makers there. And we, with Lykke, we struggled with liquidity all the time, actually, as we were scaling and growing. And this is not a problem exclusive to Lykke. All the other crypto exchanges had a problem with liquidity because there was no professional market making companies, because market makers create and provide liquidity in exchanges. So when I was thinking about what to do next, for me was like, and first-hand experience, for me was like a no-brainer business opportunity. It's like every crypto exchange will need liquidity. Every token will need literally every. And what is the company who solves that problem? It's a crypto market maker. That's it. So it was very straightforward. And so I launched Flow Technologies, was leading it as a CEO for almost 5 years. So all of your top tier, mid-tier exchanges, I'm sure you would know of, we were there market making. And for a lot of projects who issue their own tokens, we were like a specific market maker to that token. And with some really amazing experiences, we were market making for some of the world's largest crypto projects. Like we had one client that cannot say the name because it's confidential, but this client token was literally doing a couple of billion of volume per day. It was actually the most popular and largest traded altcoin in the world back in 2021, 2022. And imagine you're market making for somebody that starts a billion is a volume. And then you'd also do market making for a token that does 20, 30, $50,000 of volume per day. So it's something very small, very early on. And the other side, you trade for a really huge project. And again, really amazing experiences because we would really see firsthand the added value that we provide to the token. Because if we press the stop button on the algorithm, the liquidity is gone for the token. You would literally see it with your own eyes. Then we press the start button again, and then it's a liquid orderable. So really an amazing experience. And I just love doing that. And I really liked seeing all these algorithms and there was a lot of mathematics behind them, seeing them in action and seeing how they perform and seeing how they make exchanges and projects actually happy in the end.
I think we should also quickly explain, because you also have a knack actually, I'm very grateful. You have a good talent to explain things easily. I think market making, liquidity, everybody has somehow a feeling for it, but I think the details they probably don't understand, including myself. I'll tell you how I imagine it, then you just correct me. You are a market maker, you go to the exchange, you say, hey, okay, you guys need liquidity for this and this token. We are going in and basically we're trading all the time. We're buying, we're selling. So people who are actually there to actually trade have the opportunity to sell to you or to buy from you.
Yes.
But those tokens are crazy volatile. So how do you make sure you don't lose in this trade? Because at the end of the day, if let's say you have a coin that doesn't perform well over time and you hold those coins, somehow there must be an agreement or an insurance for that, right?
Yes. Yes.
How do you do that?
So first, you, by the way, explain market making perfectly, actually. But there's a difference between market making. If you're market making for something that's already highly popular, and if you're market making for a more newly illiquid token they just started early on. And I'll explain what's the difference actually and why there's a difference. So when you're market making for Bitcoin, it's actually fairly easy to do that. I say fairly, take this with a grain of salt, but it's fairly easy to do it. Why? Where Bitcoin is already traded on hundreds of exchanges. If I have to find the right price at which point to sell, I can just go and turn around and say, at all of these 100 exchanges, what are the prices? Let's aggregate them. Let's put them together. Let's try to construct good prices from prices that other people are actually providing to the markets. And the second thing, so it's like I can easily kind of construct a price. Usually in mathematics, it's called a mid price or a fair price. So you need to find a fair price for an asset, and then you say, I'm going to buy at this and sell at that price, which is around the fair price. And the second thing, very important, because Bitcoin is such a traded coin, you can always hedge your position. So if you sell to me and I'm a buyer, I can then offload that somewhere else at another exchange because I have access to all these markets. So that's why it's easier to market make for a well-known token, because you can find out the price very easily, and you can always hedge your position. You can offload the risk. Can you do that for a new token? Let's think. Can I find out the prices for a new token that just came out? I turn around and I say, what are the prices? Where there is no prices, I am the only one who's coming in there to the market. So you cannot find the price easily. So you have to construct it somehow very carefully. And the second thing is, can I hedge my position? Can I offload my risk? To whom? There is nobody providing liquidity, actually. So the way you manage these two challenges is actually, I will explain now how the algorithms are constructed so people can understand it. The biggest part of the algorithm is actually detecting information that comes from informed traders. So these are your insiders, the VCs, team members, advisors dumping the token. So everybody who has a bit of a specific insight about the token, you need to actually look what's happening in the markets. What are the trades coming in? How are the trades behaving? How are people putting their own orders into the order book that are not mine? So these are from other people. And then try to detect which activity comes from an informed trader and which activity comes from an uninformed trader. So somebody just who wants to buy. And the way that the algorithms work then is that if a trade comes or something activity comes from uninformed trader, then you don't need to adjust a lot. You just move a little bit things. If they're buying, you move a little price up. If they're selling, you move it a little bit up, but you don't need to do much. But let's say you detect a trade from an insider and it's a sell trade. You have to rapidly adjust the price because he knows more than you. So if he's selling and you're buying, he knows more than you. So you have to rapidly adjust the price because he's selling to you at a premium to the fair price because he knows the fair price is lower because he has a better information. Likewise, if somebody starts buying and you detect this is from an informed trader, this is from a VC who wants to buy in and they sell high, you have to rapidly adjust the price. Mm-hmm. So this is actually what algorithms do. It's an AI, by the way. Now it's popular to say it's AI, but it really was AI many years ago. It's basically a classification algorithm where you look at all this activity and then you map it. Informed trader, algorithm doesn't need to adjust a lot. Informed trader, algorithm needs to adjust rapidly.
I feel like this goes maybe in too much detail, but I just quickly want to know, when you say informed, uninformed, obviously if you have an exchange, they have KYC, but I assume you don't have the data literally, there's no. John is something. You look at maybe at the wallet or the size, or does he hold this coin since a long time? Is that how it works?
Yes, exactly. So you look at all of these qualitative, let's call it qualitative features of the trading activity, and depending on that, then you adjust. But because I cannot know which wallet or which account did a trade, because this is hidden, I don't know the names. I don't know if it's a VC, but I can look at the activity, and then depending on the activity, you then classify who it is. Exactly.
Yeah. And is this, you have to raise funds for that? Because
yes.
First of all, you have to build the thing, which probably is not easy, all the algorithms, etc. And then yes. I assume you have to have a stock of tokens that is your capital that you're working with.
Yes, exactly. But the capital is not raised. This is actually what a lot of people don't know about market makers. So market makers have a lot of assets on their balance sheet. So they have a big book, right? All of these tokens and assets. And usually the question is, where does this come from? And it turns out you don't raise money to buy those tokens and those assets. You actually borrow them. So market makers have a big book because they borrow a lot of assets. And I will tell you why this is important to know. If BlockFi, Celsius, Gemini, Genesis, and all these borrowing and lending platforms were giving you high yield on your cryptos when you lend it to them, where do you think all of these cryptos were ending up? They were ending up with market makers. So the biggest borrowers on the planet in the crypto world are actually market making companies, because market makers need those tokens on their books so they can trade. but they cannot buy them themselves because they don't have billions of cash just lying around. So they borrow it. And the way they borrow this was through BlockFi, through Voyager, through Celsius. All of these platforms, FTX, all of those platforms were sourcing capital from everyone around the world and then giving it out to market makers so they can provide liquidity.
But that begs the question now, because all of them that you mentioned, they went bankrupt.
Yes.
So
exactly.
does that mean market makers also got bankrupt? Because at the end of the day, they have put their risk to the market makers.
Yes.
In some terms. So
Yeah.
does that mean actually the market makers lost a ton of money and then in second order, Celsius, BlockFi, all of those crumbled because of that? Or did they lend it out, I don't know, to unfavorable terms? Or what happened there? Yeah, it would be interesting to have an insight.
Yes. So actually, some of the market makers blew up. So there's a different reasons what was behind the reason why they blew up. So for instance, Alameda Research was a market maker that blew up, that got all this capital on their balance sheet, but they blew up because they were just speculating. They were providing liquidity, but also speculating a lot in the market.
Yeah.
3 Arrow Capital, which was a big liquidity provider, also blew up because they were not managing their risks well. Genesis was also one of the market makers that blew up actually because they didn't manage the risk properly. And there's a lot of other market makers that had losses, that they didn't blow up, but they had losses because of all of these things that happened. And the reasons why people had losses because it's like a domino. To explain the domino, Terra Luna blew up, then 3 Arrow Capital blew up because they were actually one of the biggest backers of Terra Luna. Then a few other companies blew up, then FTX blew up, then Alameda Research blew up. So it was like a domino effect where you just had people bankrupting, and in the end, the borrowing and lending platforms bankrupted because they were the ones who were short of the capital. They just said, okay, it's gone. I cannot give it back to people who gave it to us.
Mm-hmm. And somehow, how did you do in these times, in these troubling times, as a market maker?
So to be honest, very lucky to dodge some of these bullets actually, because I can tell you, like, I know many market makers and I have not heard a single one telling me, yeah, we dodged everything, because these market makers were supporters of the ecosystem. So market makers were providing liquidity for Terra Luna and for the tokens there, but they were not the ones running Terra actually as a blockchain, which was a scam, among other things. Likewise, also when all of these tokens were collapsing, the market makers there were adding a service. They were not the one that provide liquidity. That's the service that they offer. So it was a very challenging moment for market makers and the whole ecosystem at the end of 2021, 2022, and 2023, because the market makers, as things were collapsing, their balance sheet was shrinking. And that means that the liquidity on the exchanges was shrinking as well. So you had then time periods in 2022 where basically liquidity was very thin. And if you just had one big trade, because there's not a lot of liquidity, there's not of the market makes, one trade could move the price very easily. And that's why we saw Bitcoin dropping below 20,000, because you had a lot of people who needed to sell. They just needed to get out. There was not enough liquidity, and then they pushed the price easily. And this is the reason why I explain this, because people usually come to me and they say, Anton, why do we have big price moves? Is it because some macro move or whatever, something comes out? And I usually tell people, no. Big price moves happen usually unrelated to news, and they happen because you have a big trade that has to happen because somebody has to sell immediately, and you have very low liquidity for market makers. This is why big price moves happen.
And that's also, I think, as you mentioned, the liquidity is spreading out to many exchanges, right?
Yes.
And basically, you as a user or as a trader, I'm not a trader, but if I want to trade, you go usually where there's the biggest liquidity.
Yes.
That's kind of like a monopolizing force, or a kind of a force that is like this power law distribution. That basically a few big players will thrive and others will fall away. I have never used Lykke, the exchange that you co-founded, but it seems to me as an outstander that this was a little bit the issue with Lykke as well, because it seems, I'm not sure if it's still operating, but it seems like it was early, but it didn't really have an impact, or let's not say have an impact. It just didn't thrive, while others basically shot up overnight. Binance suddenly came, then FTX, of course, came, meteoric rise, right? Absolutely crazy in a couple of years, become one of the dominant players. And then also, poof. How do you think about exchanges now? And especially given that now we also have the decentralized exchanges, a new player in town, so to say.
Yes. So I have a very provocative opinion there about exchanges and how they will evolve. Every year or every cycle, people come to me and they will say, Anton, we will have a consolidation of exchanges and you will have only a few big ones that will stay there forever. And I tell people, no, it will be exactly opposite. You will have more and more exchanges and more people launching different types of exchanges and with different ideas. And then you will have actually change in dynamics, who is the biggest and who is the strongest. And then I usually get a counter argument there. People tell me, but no, that's not the case. In traditional finance, you have NASDAQ, New York Stock Exchange, and that's it. And they've been the biggest for the last 40 years. But the difference between traditional finance, where that happens, and crypto world, where that doesn't happen, is because in traditional finance, you have laws and regulations that favor and push few big players to become dominant. In the crypto world, that's not the case. In the crypto worlds, the barriers to entry as a crypto exchange are extremely low. You just set up a platform, you launch, and if you can attract liquidity, you're one of the biggest very quickly. Let me give you an example. At the beginning of the podcast, I told you back in 2013, what was the biggest crypto exchange? It was Mt. Gox. And then Mt. Gox exploded. And then do people know what was then afterwards the biggest exchange? Usually people don't remember it. It was Bitrex. Okay. So Bitrex was the biggest crypto exchange back in 2014. And then they died out, and then another exchange came about. People don't remember it. It was OKCoin. OKCoin was the biggest crypto exchange for this period of 2015, 2016. Then Binance came out of nowhere 2017 and became the biggest crypto exchange, or the biggest rising. Then after Binance, there was one crypto exchange that almost took them over, which was BitMEX. And then BitMEX had its meteoric rise and then collapse. And then what was the next exchange that came about extremely fast? FTX. And then FTX exploded, which is now exchange that is growing extremely fast. It's Bybit. So what I have learned in the crypto world is that these exchanges can really skyrocket and grow very quickly because the barriers to entry are very low and the innovation is extremely fast. And you also now mentioned as well decentralized finance or decentralized exchanges, automated market making protocols. Even there you have actually a strong dynamics. You first had Uniswap. Then after Uniswap, it is now GMX came out, which is that's like order book on the blockchain exchange, so like a central limit order book exchange. Then also now have DYDX actually that's growing extremely fast. I'm really of the opinion is that because of the innovation and low barriers to entry, if you structure your exchange smartly and make a few right moves at the right time, which obviously in retrospect with Lykke, we were not doing certain moves in the best possible way for that time period, you can grow them extremely fast and become a dominant crypto exchange.
Okay. And is Lykke still alive? Is the website still up? Are people still trading there?
Still trading. It's a small exchange. It's one of the smaller ones. So back then we were, and back this time period of the glory days, it was like, I think after Bitstamp was banned back then, by the way, the biggest European exchanges. I think the Lykke was just the second one back then, actually, second biggest one. So still it's up and running, but it's a very small crypto exchange and needs to go back on its glory days.
Okay. So, Anton, are you right now in Dubai?
Exactly, yeah. So
what brought you to Dubai? I thought Switzerland is a good crypto nation. It would be interesting to hear somebody who knows both places.
So look, for Switzerland is really my home. I've lived in Switzerland for more than 10 years, almost 15 years. And Switzerland has been really an amazing hub for, I would say, even the birth of crypto, but obviously on a smaller scale because it's a small country, it's a small environment. And I had the best time ever during, I call it the glory days of the Swiss Crypto Valley. So this was your 2016, 2017. The smartest people on the planet were either in Crypto Valley or coming to Crypto Valley to build and work and do things and whatever they had in mind. And it was really like, I remember the smartest people on the planet were there. I think it was closely related to the ICO bubble and the fact that Switzerland, with a couple of law firms and a couple of really visionary lawyers, found the right way how to do this, play this trend, which was the ICO mania. And you had the smartest people on the planet in Crypto Valley. It's just my fact and my honest opinion, actually. Having said that, something happened after COVID. I can tell you that. I saw that. And I saw like after the crypto bubble, You had actually many people who built their own companies and launched their own startups, myself included with a couple of them, but it was, you had the burst of the Swiss crypto banks, actually, Signum and SEPA, both in 2017, 2018, the idea came about, they launched and so on. TrustSquare was built in 2018 very spontaneously. A lot of many other crypto companies emerged out of Switzerland and tried to build something relevant globally. But something happened during COVID. I cannot pinpoint what it is, but when I was traveling around the world after COVID, I noticed there's a shift that now the smartest people on the planet, they're coming to Dubai. So just to tell everybody very transparently, Dubai, this is my honest opinion as seeing it. Dubai is far behind when it comes to services, infrastructure, crypto services, crypto solutions, crypto products, crypto infrastructure than Switzerland. Far behind, even though you wouldn't think of that from the news headlines and everything when you read about it. It's far behind, but Dubai now has the biggest asset on the planet is the people. So to tell you a little bit about this, Vitalik is here very often in Dubai. Polygon founders moved to Dubai. The key people from Solana Foundation are actually here in Dubai. So all the smartest people on the planet are now coming to Dubai. And what I have learned in my entrepreneurial startup career, it's all about the people. Yes, we have good laws and regulation. Yes, we have, I don't know, what can you now imagine? It's all about the people, you know.
But what is it? Why do the people go to Dubai? Because I can also see some downsides, whether maybe like government and like stuff that also it attracts some shady people. Let's be honest as well, right? It doesn't have the most stellar reputation. Why do you think all these smart people are drawn to Dubai? Somebody had to start it.
Yeah, so I think first, just to tell you that Dubai and Middle East and United Arab Emirates is a fascinating country and region. And I think a lot of people who have never been here, people might have certain perceptions that are completely actually not true. So for instance, people think now it's hot here. And I was in Europe a few days ago, and the weather here is more pleasant than in Europe. In Europe, it's cold and rainy, or I was seeing my parents in Croatia the other day. It was warmer than in Dubai. So in Croatia, it was 30 plus degrees. Here, it was 26. Very nice and pleasant. Okay. So this is, for instance, but I agree with you in June, July, and August, like everywhere in Europe, it's hot as hell. It's not like a pleasant environment. Then I think people then have a different idea how nice or not nice is in terms of the environment. And in Dubai, it's the safest place on the planet. You can literally leave the doors of your apartment open. You can leave your car open when you park it. Nobody will steal it. Try to do that in Switzerland. Or God forbid anywhere else in Europe. By the way, if you do that anywhere else in Europe, I mean, your car is gone. You can leave your car, actually. You can leave your watch on the table. Nobody will steal it. It just doesn't happen here. So it's extremely safe. It's the safest country on the planet, actually. Then also what I have to say is people here are very open in terms of expressing your culture and your religion. So everybody is welcome here, no matter what religion or what culture you are. I would not say that about Europe. In Europe, if you openly say, I am Christian, and you wear a cross around your neck, I know that people don't react very well to that. They will say, we're culturally agnostic. We're religiously agnostic. Why are you pushing your culture towards other people? Or you can say, I'm just expressing it and other people embrace it. So the environment is very inclusive and very open here because you have so many different cultures, and you have to bring the people together, and you can only do that by being very open, for instance. And also, just to tell you, for instance, the quality of the infrastructure here is phenomenal. Like you have everything here. Compared to, I was in Europe a few weeks ago, you know how it is in Switzerland. After 6 o'clock, God forbid you have to eat something, or if you want to go buy food at a store, you cannot because it's closed. Because it's a different vibe, different environment. So the ease of life in Dubai is very easy. So this is more on the lifestyle side. Mm-hmm. Now on the crypto side, this is the part that I have to say that people overestimate, because crypto-wise, Dubai is far behind. Sorry, UAE is far behind actually, Switzerland, Asia, and so on, because it's just so early on. People are just recently started coming here and building things. And so it's far, there we are definitely far behind. But in terms of lifestyle quality, I think Europe in general, I think it's not going in the right direction in general. I think US is extremely challenging. If you're a crypto projects, I would not recommend going there. I don't personally go there for crypto related matters. And I think Asia is also very exciting, but I think this is like a nice bridge maybe between the West and the East. So say it like that.
Okay. Yeah. I heard the same basically about Singapore in terms of geographically being the door to Asia, etc. Yeah. I've never been to Dubai, so I might have some preconceptions. How is that? But all good. Let's go. I have one more or a couple of more questions. And one of them is, Anton, you are a mathematical guy, right? You're very gifted. You have the technical side, but you're also now posting a lot on social media. And for me, it was always like, okay, this is the stuff that people like me can do who are not very mathematical gifted, who are not programmers. What do you see? What do you see is the upside for creating content? Because you could do so many things, right? In terms, you could do MEV, you could launch an exchange, you could do all kinds of magical things, maybe even on the protocol level. Why content?
Yeah.
It scares me a bit, but it also gives me hope because you seem to see a lot of value in it.
Yeah. So I think also, first of all, when it comes to content creation, I was very much inspired by other people, how they do it, yourself included, in a sense of creating relevant content, either to a podcast or some other ways, and then sharing it with the world with the goal of added value to other people. Because what you and I are doing now, it's adding value to other people. It's not, you and I know what we're talking about because it's our kind of native skill and native experience, actually. And look, I just think that we're actually at the break of a big revolution that's first was actually kicked off with the birth of social media platforms. That for the first time ever, you had an opportunity to communicate with people in a scalable, efficient, digital way for free. Because, Jonas, you might remember 10, 15 years ago, if you wanted to reach a lot of people, the only way to do it was through ads by going on TV or going to the newspapers and so on. So it means you had to pay to reach people, unless you did some brilliant guerrilla marketing campaign, but actually you have to pay to reach people. And social media platforms really flip this whole concept upside down, is that you can reach a lot of people for free, but only if you have good content. Because social media platforms want to keep people on their platforms. They don't want them to leave because they show them ads and that's how they make money. But the way they will keep people on their platforms is by highly interesting, educational, or whatever you want to call it, content that people engage with, they watch it, they comment, they like it, and so on. So the first time ever in history, you have a big equalizer in context of reaching the people, and that equalizer is actually high quality content. And I saw that in action many years, but I never really went in that direction. But somehow something flipped in me in 2022 when I thought, this is the last train. Either you get on the train now and start building your audience, your community, your following, however you want to call it, and also close related to that, your personal brand of who you are as a person and what value do you add to people. And I said, it's now or never. It's now or never. But I had no clue what I was doing, by the way. And I had a very good friend. I still have a very good friend, Birgit Rosipo. She's a marketing communications expert. And I told her this idea. And she said, Anton, I will make you a superstar. We're going to make content. And you have to learn it because I didn't know how to do it. You have to learn it, do it a lot. And I started posting content. And I was the most successful on LinkedIn. And I proudly say it on LinkedIn. I have more than 8 million views. So like it works. The stuff that I post works. I reached more than 8 million people. That's more than the whole population of Switzerland, more than the whole population of United Arab Emirates. And I did that for free through LinkedIn, social media platforms. And I did that because I had fairly good content. Otherwise, LinkedIn would not show it to me. And I'm very happy for that, actually.
But what is the goal? Do you see it like in the tradition of founders who become influential themselves? We see it in crypto a lot. We have, let's say, for instance, Vitalik is, he's not an influencer, but he is there and he is putting out his visions now a little bit less than back in the days. Or Solana, or even Do Kwon. Also on the bad side, these people were present. They were the founders. They were executing, but they still were also present, defending and shouting out into the world the views. Or even somebody like Elon Musk, right? Like who is very present on social media.
Yes.
Do you think that influenced you? Do you build this audience, bank it for another new project, or do you just see it as a goal in itself? Or what is the means behind it? Because having a lot of followers in itself, is that the goal, or is the goal something else?
Yeah, you actually explained my goals just on different time horizons. So on the short-term time horizon, it's just a goal in itself. So let's build a big following, build community, loyal crowd, people that I add a lot of value. Hopefully they give feedback back to me. And the short-term goal is just to create that audience and create that community that I interact with and that I add a lot of value. This is the short-term goal. The long-term goal is to leverage this for sales. But I want to actually, maybe for the first time ever in my entrepreneurial career, I want to do it the opposite way than I used to do it. Because first I would build the product. I had the very good idea that this product would be fairly useful to people, but I built the product and then went to find the audience to sell the product. And this time I will first build an audience and then study and analyze my audience and really reflect what's really a big added value to them. And then I will go back and build the product. And or build a better product because I have the audience. And I think this is the future. And I think whoever doesn't do that will lose out very quickly, because we have something coming that's going to take the world by storm. And this is this goddamn AI. Because people will start churning out content with a click of a button. It will be garbage content for in the next year or two, but then it will become better content. And it will become even better content. But what will win in the long term will be personality. Your personality. I'm not saying great personality. Your personality is what's going to win. And if you don't start now, or who is not starting now, I think this will end very badly in a sense of missing out on an opportunity. I don't think anything bad will happen to you or anyone listening to this, but I think you will lose out from the opportunity, which I think is massive.
Okay. That's interesting. Very good. Now to wrap this up, Anton, I know we don't have much time, but it would be amiss to not ask you about some market outlook. How do you perceive, let's say 2024? Do you think we continue to go up? Do you think like we're going to peak early? I don't know. What is your take? It would be super interesting. And a lot of people want to know as well. If you have some takes, if you have some numbers, let's throw them out now.
Okay, but I'm happy to provide that, but not giving a financial advice, and you should not take it as such.
Of course not.
Yes, I think objectively now we're in a bull run. I think certain metrics are still a bit lagging to make it, a full blown how people kind of imagine it. And one factor that's lagging is actually venture investments. But the price wise, we have hit all-time high for Bitcoin and some other coins, maybe a bit less known. So we're at all-time highs. I anticipate that we're going to be in a bull run until spring of next year. I think then in spring of next year, you will have this, something will happen, leverage will accumulate somewhere in the ecosystem, it will explode, and then off we go down. I think price-wise, I would expect Bitcoin to hit between 120,000 to 150,000. So it's a long way to go actually, right? Yeah. And I cannot time what that peak will be, but if I have to kind of mark it up, I think that will mean sometimes like 5 trillion total market cap of all cryptocurrencies, which still means a long way to go for ahead of us. And I think in terms of like interesting things, this market cycles, obviously the really popular narratives are meme coins. Out of nowhere, literally came out with meme coins, real world assets, more on the token side than on the product side. I think also this bridge between crypto AI, people will try a lot of things, even though I don't see a lot of value there. And I think the last very exciting narrative is going to be decentralized social networks, even though they're the most earliest from all of the ones that I just described. But I think also democratizing social networks and access to social networks and being a part of social networks and benefiting from that, really, the social media platforms are due for a disruption. I don't think it will happen in this cycle, but this is something I'm very passionate that we, somehow these social media platforms all got us hooked on. They make a ton of money on us. They can kick us off the platforms however they want. We're not making any money, a lot of money directly to those platforms. And I'm ready to see some disruptions there.
Nice. And do you have, in terms of alt L1s or smart contract platforms, something that you say, hey, this is my favorite one, or this one is interesting, or you're specifically bullish on?
So I think in terms of, it's a fact at the moment that actually Ethereum is the dominant L1 with smart contracts, let's say useful L1. Yeah. And what I actually am very excited about is rollups. So this kind of, how can you build on top of Ethereum actually, and then offer your services and your products in maybe a bit of a niche or a customized manner. And like a great example there is actually Base. So Base is an L2 from Coinbase, which is a roll-up and uses the security and the ecosystem of Ethereum network to build and offer products in their ecosystem. And I think we will see that a lot. We see it early on actually with Binance, because Binance launched their own smart chain, which was kind of like glued together with Binance. I think like in the near future, every respectable crypto company will have its own L2, just like Coinbase and Binance have. And I think that's where a lot of action will happen. Look, in terms of what's hot at the moment, DeFi on Bitcoin is also very hot. So this is also where things are gravitating a lot. But to be honest, like I'm following liquidity a lot at the moment, and there's not a lot of liquidity on all these other chains. So even Solana that experienced a big growth, Solana's liquidity growth is actually within the context of the meme coins. But it's growth of liquidity within a same ecosystem. So it's not really that tangible. Yeah, so it's just like money being flipped between people. And that's actually where it is. So the liquidity is on Ethereum, and then the L2s, Arbitrum, Optimism, Base, and so on, ZK. And then you have Solana, and then you have all the other guys, which might become failed L1s. And already today, we're seeing this narrative where L1s are becoming L2s, which was started by a couple of projects. I think the most well-known today is actually Lykke. So Lykke was a famous L1, started many years ago, and now they pivoted to become an L2 on Ethereum. And the reason why they decided to do that, because they couldn't attract liquidity.
Yeah.
So it's easier to attract liquidity as an L2 for Ethereum than as your own L1.
Great. Learned a lot. Thank you so much, Anton, for your time. It was a great discussion. Thank you so much for coming on. Where should people follow you? The call to action to people, what should they do? Should they follow you on LinkedIn or Instagram, Twitter, all of them?
Yeah, first I want to thank the whole audience for listening to us, and first invite them to follow you and subscribe to the podcast. And people can find me on all social media platforms. So I actually have a TikTok account, Instagram account, YouTube account, LinkedIn, and Twitter, X. The one where I get the most action, so say it like that, is actually LinkedIn. So you can always ping me on LinkedIn. I get hundreds of messages every day. I reply to all of them, even though it takes me a bit of time. So if you want to reach me, LinkedIn or X, but I invite you to follow me on all of the platforms. Just typing Anton Golub, and I'm sure you'll find me immediately.
Thank you so much.